Hey everyone, welcome to a game-changing episode that could revolutionize the way you handle your finances. Today, we're not just scratching the surface, we're diving deep into a topic that's crucial for everyone who wants to maximize their wealth. That's right, we're talking about taxes. But hold on, this isn't your run-of-the-mill, boring and lackluster tax talk. We're about to unveil 15 insider strategies used by the wealthy to significantly reduce or even completely eliminate their tax bills. Yes, you heard that right. We're talking little to zero taxes. These aren't just tips. These are the secrets that the rich don't usually share. And today, they're all yours. So grab your pen and paper, or better yet, open up your notes app, because each tip we're going to share is a piece of the puzzle in keeping more of your hard-earned money. Whether you're a freelancer, a business owner, or just starting your financial journey, these strategies are tailored for everyone. Number 1, invest all of it. The rich never let their money sit idle. They understand the golden rule of taxes. Reinvested profit is not taxed. By choosing to invest their profits back into their businesses, they can grow their wealth rapidly while minimizing their tax burden. So if you're a business owner and your company is about to make a significant profit, consider reinvesting it to fuel further growth. It's a smart move that can skyrocket your net worth while keeping your taxes at bay. Number 2, deduct everything. The second golden rule of tax optimization is to deduct everything you can. Rich people know that any expense related to their business is tax deductible, so they make sure to use their businesses to buy things they need personally. Whether it's technology, travel expenses, home office utilities, or even dining out, they find ways to make these expenses work for their businesses and reduce their taxable income. Remember, the more you deduct, the less you pay in taxes. Number 3, move somewhere with little or no tax. Changing your residence can have a significant impact on your tax situation. The rich understand this and often choose to move to countries with little or no income tax. Places like Dubai, Monaco, the Cayman Islands, or the Bahamas offer attractive tax advantages for those looking to keep more of their money. While moving to another country might not be feasible for everyone, it's essential to understand the impact your location can have on your tax liability. Number 4, send it overseas. Tech giants like Facebook, Google, and Apple have mastered the art of minimizing their taxes by setting up companies in countries with favorable tax environments, such as Ireland. By transferring intellectual property and paying licensing fees to their overseas subsidiaries, they effectively reduce their tax burden in their home countries. This strategy allows them to keep a significant portion of their profits offshore, where they face lower tax rates. If you live in a low-income tax country, you can also set up a local company there to optimize your tax burden. Number 5, charitable donations. Rich individuals often establish their charitable foundations. Not only does this allow them to make a positive impact on their communities, but it also provides significant tax benefits. Money donated to charity is not taxable. By contributing to their foundations, the rich can deduct these donations from their taxable income. Additionally, they can also donate assets like land or vehicles, further reducing their tax liability. It's a win-win situation that allows them to give back while minimizing their tax burden. Number 6, instead of a salary, take equity. Pay me in equity, as Queen Bey said. Rich individuals often opt to receive equity rather than a traditional salary. The beauty of equity is that it isn't taxable unless you sell it. This strategy has allowed people like Elon Musk to accumulate massive wealth rapidly. Elon's yearly salary is reportedly between $0 and $23,000. Instead, he receives stock options tied to Tesla's performance, which has propelled his net worth to astronomical levels. By taking equity, you can grow your wealth tax-free until you decide to sell. Number 7, buying art. Did you know that the art trade is the last major unregulated market? Rich people take advantage of this by using art as a way to minimize their tax liability. When you buy a piece of art, it counts as an expense. So, if your expenses match your income, there's no money left to be taxed. Moreover, art has the potential to appreciate significantly over time. By donating art to museums or their own art foundations, the rich can claim substantial tax deductions based on the appraised value of the artwork. It's a smart strategy that allows them to save millions in taxable income. Number 8, multiple nationalities with no fixed residence. This one might sound shady, but it's a strategy used by many wealthy individuals worldwide. By not having a fixed residence and owning properties in different countries, they can navigate tax systems more effectively. They can provide proof of address from a property they own in a country with lenient tax laws, making it challenging for institutions to gather additional information. Some even choose to live on massive yachts, moving from one place to another, making it even harder for tax authorities to pin them down. While going completely off the grid might not be the best long-term solution, Having multiple nationalities can provide significant tax benefits. Number 9, gift money away. Did you know that gifting money to others can be a non-taxable event? There's a $15,000 cap on non-taxable gifts, but if the gift is worth less than that, you don't even have to report it to the IRS. For wealthy individuals, this means they can gift substantial amounts of money to their loved ones without incurring any tax liability. In fact, as of 2021, the lifetime gift exemption in the US is capped at $11.7 million, as long as each gift is below $15,000. So, if you're feeling generous, you can share your wealth with your family and friends while minimizing your tax burden. Number 10. Hold it in privacy coins. Cryptocurrencies have revolutionized the way we think about wealth transfers and security. While cryptocurrencies like Bitcoin and Ethereum have become more regulated, there's a new breed of currencies called privacy coins. These coins, like Monero Dash and Zcash, allow for completely anonymous transactions. While their legality varies in different jurisdictions, they provide a level of privacy and control over your wealth that traditional currencies don't. Additionally, profits from the sale of cryptocurrencies are often taxed at a lower rate than other assets. Number 11. Borrow against your assets. Rich people often have a portfolio of valuable assets, but they prefer to keep their cash in their businesses. However, there are times when they need quick access to cash, and that's where their relationship with banks comes into play. By showcasing their valuable assets as collateral, they can easily secure loans without incurring tax liabilities. Since it's a loan, they're not required to pay taxes on the borrowed money, only to repay the loan itself. This mutually beneficial relationship with banks can last for generations if managed correctly. Number 12. Filing for bankruptcy. While filing for bankruptcy is generally a complex and undesirable situation, the rules change when you're super rich. By strategically using bankruptcy laws, wealthy individuals can protect their assets from being seized by creditors, while still maintaining control over their wealth. Bankruptcy laws prevent creditors from taking away personal assets or garnishing wages, allowing the rich to protect their wealth, even in challenging times. Additionally, the financial loss incurred during bankruptcy can be tax-deductible, providing further relief from taxable income. Number 13. Claim your yacht as your second home. We all know that governments love taxing homeowners, but the super wealthy have found a way around this by claiming their yachts as secondary homes. As long as the yacht has facilities like sleeping quarters, a kitchen and a toilet, it can be considered a second home for tax purposes. So, when rich people use their yachts as holiday homes, they can benefit from better taxation rates. Motorhomes can also be used in a similar way, although it's less common among the super rich. Number 14. Using a trust to avoid estate tax. Estate taxes can take a significant chunk of wealth that you want to pass down to your children. However, the rich have a solution for this, using trusts. By placing assets into a trust, they effectively remove those assets from their estate, reducing the tax burden on heirs. Trusts provide control and protection over the assets, while allowing for gradual distribution based on specific conditions. This ensures that wealth is passed down efficiently and avoids unnecessary taxation. Number 15. Depreciating assets on paper. Accounting is the language of money, and the rich understand how to use it to their advantage. Depreciation is a deduction that allows businesses to write off the cost of investments over their useful lives. By spreading out these deductions, businesses can minimize their taxable income. Rich individuals know how to leverage depreciation by investing in assets like factories, equipment, and vehicles and deducting their value over time. This strategy reduces their tax liability and keeps more money in their pockets. So there you have it. 15 ways that rich people pay little to no taxes. These strategies are used by the wealthy to optimize their tax situations legally and effectively. Now, we must emphasize that this is not financial advice, but rather valuable information for you to consider. If you want to learn more about these strategies and take control of your future of financial freedom, click the link in the description and learn more. Remember, you have the power to make informed decisions about your money. Don't pay more taxes than you legally have to. As always, we love hearing from our subscribers. Let us know in the comments what percentage of taxes you pay in your country. It's sure to spark an interesting conversation. And if you're ready for an upgrade in the way governments handle taxes, write the word upgrade in the comments.